Hello, everybody, and welcome back. Today, my guest is Flora Wang. Flora is a director, sustainable investing, and an assistant portfolio manager at Fidelity and responsible for the Fidelity Sustainable Asia Equity Fund. Welcome, Flora.
Hi, Thomas. Thanks for having me here.
Flora, today we want to discuss latest sustainability investment trends in Asia and the ESG landscape in Asia is still at a very early stage. So which Asian nations are leading the way and which need to catch up?
It's a good question, but also a little bit difficult to answer because as we know, Asia is actually a very diverse region, and ESG, as simple as it sounds, actually covers a wide range of topics. So I would say, some markets are leading on some of the ESG topics, while others are leading on, some of the other topics. Take carbon emission as an example. I think China is definitely taking the lead together with, countries such as Korea and Japan, all of which have committed to a carbon neutral goal either by 2050 or by 2060. China also just launched its national carbon trading market, which is the largest in the world by volume. And the government for years has introduced a lot of policies to provide incentives to encourage the development of green energies as well as green transportation, such as the development of electronic vehicles. If we look at gender diversity, India is actually the first market in Asia that has mandated at least one woman on the board. But now it's something I think being taken up by a few other markets, such as Hong Kong, which just launched a consultation to require companies with a single gender board to appoint at least one director of the opposite gender by the next annual shareholder meeting. Korea has done something similar as well earlier this year. So, on gender diversity, you have some other markets that are really taking the lead. And then I guess on the issue of ESG disclosure, I think Hong Kong, Singapore, and Taiwan are the markets that have worked on this topic a little bit earlier. And as a result, you have a larger number of companies in these markets that are already making good disclosure around ESG. So I think it really depends on the topic and the market. But overall, I would say the direction of travel is very much aligned. I think as a region, all markets here are really starting to embrace the concept of ESG, and you're seeing progress across the board.
Hi there, just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much and enjoy the video now.
So what is the relevance of the Sustainable Development Goals in Asia, and which goals are most important currently?
So the Sustainable Development Goals are really, I think, designed to solve the world's biggest challenges, right? Such as poverty, such as hunger, such as gender equality, access to education, to healthcare, you name it. And these challenges, I think, are issues for which Asia actually is probably having a harder time with. So I think for the world to achieve the Sustainable Development Goals, you can't really do it without Asia, especially if you consider Asia actually hosts more than half of the world's population and produces more than half of the world's carbon emission. And, SDG 13 is all about, being green, getting our climate back into order. So whichever goal you look at, I think Asia really should be the destination for investors seeking to create that impact, seeking to make that contribution to different SDGs with their investment. So Asia is not only relevant, but actually I think critical in terms of us collectively achieving the UN SDGs.
Of course, investors want to know, is there any evidence that ESG strategies in Asia generate higher returns or reduce the risk in a portfolio over a longer term?
That is the perennial question, isn't it? And as a result, there has been, plenty of research out there looking at the correlation between, ESG performance and company financial performance, and also the correlation between ESG performance and investment returns, and also volatility. I think there is a meta study that actually looked at all the research that delved into this topic. If I remember it correctly, I think 95% of the research out there actually found a positive relationship between good ESG performance and good company performance and good investment return, or at least a non-negative. So I think at a minimum, we've got enough academic evidence to say that incorporating ESG is not going to hurt investment return. And there is a good chance that it can actually enhance your investment return. Fidelity also conducted a similar research last year using our proprietary ESG rating as a proxy for companies' ESG performance. And we found, a similar correlation between ESG and investment return during a, quite volatile market period, which is when we had the pandemic. So I think the fact that we were still able to see that positive correlation during a very special period or very challenged period of time actually tells us ESG really underpins the resilience of companies. And I think that goes to your question on what's the relationship between ESG and volatility. But I have to say, you can have all the correlation you have, but correlation is not necessarily causality, right? And also, empirical research really looks at the statistical relationship based on the data in the past. It doesn't necessarily tell you this is going to happen in the future. So for me, I think it's good that we're looking at these academic evidence, but more importantly, I think the question should be whether it makes sense, whether it actually makes good business sense for companies to really look after the environment, look after their key stakeholders, including their customers, their employees, the regulators, and their investors, right? I think the answer is absolutely yes. Companies taking care of their stakeholders, including the environment, will definitely stand a better chance of delivering their performance over the long time. And that is very important for us as a long-term investor.
What factors do you incorporate in your investment decisions, and how about gathering ESG data in Asia?
It really depends on the company. So I think E&S, at least, is very sector specific. So the kind of environmental issues and social issues the company is exposed to will very much depend on what business it's in, right? So for a mining company, obviously, occupational health and safety, the environmental concerns is very important. But for a bank, how it finances businesses, what kind of ESG considerations it incorporate into its lending decisions will be something we look at quite closely when evaluating the sustainability practice of a bank. So, what factors we look at really depends on the company, and that really highlights, I think, the importance of understanding the business in order to do ESG integration effectively. We can't be doing ESG analysis on an isolated basis, talking about ESG for the sake of ESG. If we want to do ESG effectively, every company needs to be analyzed on its own, based on our understanding of its business, its development history, its plans for the future, and the people who are making the decisions for the company. And that's why I think at Fidelity, we really decided to get the core of Fidelity's assets, which is our sector analysts, to spend a meaningful chunk of their time to do ESG analysis for every company under their coverage, instead of outsourcing that ESG analysis to a third-party vendor or insourcing it to a specialized ESG team in-house. To us, true ESG integration has to be integrated with the sector analyst. And because of the approach we've taken, we can be company specific.
What about sustainability goals? Are there any specific sustainability goals that you are pursuing with your fund?
We look to invest in companies. Actually, we look to invest in two kinds of companies, broadly speaking. One is companies that are already doing really good on ESG. So these are what we call the ESG leaders. Of companies are what we call ESG improvers. So these are companies that are not doing so great today, but have expressed a genuine willingness to improve and more importantly, have come up with a credible plan to achieve those ESG improvements over, the medium to long term. And we see bigger potential of alpha generation as well as impact creation coming from this group of improvers, because as they deliver their improvement around ESG, market should be, re-rating these companies, and that's where you get that additional source of alpha generation. But at the same time, as they improve their, energy efficiency, water recycling rates, employee occupational health and safety, those in themselves are positive environmental and social impact that are coming directly from, the investment in these companies. We think, as an investor, we would consider ourselves as a facilitator or catalyst for those impact, because, by virtue of providing financing to these companies, we're enabling them to do what they aspire to do. But at the same time, we're also engaging with these companies on a regular basis, firstly, to share with them the experience and good practice we see at other companies and markets, to help them improve better and more effectively, and also to check on them regularly to make sure that they are indeed making the progress they claim to be making. And if they fail to deliver that progress, that's when we will basically implement our exit strategy to say, hey, this company has failed to deliver the progress we thought they will be making. That's why, as a sustainable strategy, we will no longer be supporting them.
How does your ESG approach affect the structure of your portfolio in terms of country and industry and holdings in comparison to our regular managed Asian equity portfolio?
So we are actually a very much fundamental bottom-up strategy. So we evaluate the merits of every company on its own. We don't really take a top-down approach to say, in terms of sector allocation or market allocation, we aim to achieve a certain sort of mix. So the sector allocation and market allocation you see is purely an outcome of the individual stock selection decision. So I guess it's very hard for me to build that link between the stock selection to the actual outcome. But in terms of the stock selection decision, the ESG credentials of a company is a very important component of the inputs that goes into our decision making. I think for those laggards, we'll be very careful in investing in those laggards, and very selective in that we would only in companies that are not doing good on ESG if we think they have a potential to improve. And we would develop an engagement strategy when we decide to invest in the company, so that we have a very clear idea about the type of improvements we want to see at this company over the next 18 months. And we would engage with them, as I mentioned to you before, to help them improve. And hopefully they will improve. But in the event that they don't, we will sell out the company. That's how we are structuring our engagement strategy in a way that actually has teeth. And then on the other end of the spectrum, for companies that are already doing really good on ESG, the ESG leaders, their sustainability practice is likely going to increase our conviction in the name and could potentially lead to an upsizing of this company. So that's how I think the ESG credentials actually impact the stock selection and position sizing of every single name in the fund.
This was Flora Wang from Fidelity. Thank you very much, Flora, for being with us today and sharing your views.
Thank you, Thomas. It's a pleasure.